Welcome, day traders. We are watching a recap of the Asian session. This week, several central banks will announce their rate decisions. For this reason, cautious sentiment prevailed on a Monday morning. Australian trading floors are closed for holidays. In other stock markets, bulls and bears were tussling near monthly highs. Japanese equities were up, and New Zealand stocks have been falling for 6 weeks in a row. The unexpected rate hikes by the Reserve Bank of Australia and the Bank of Canada last week indicated that the global tightening cycle is not over yet. To combat high inflation, regulators have been raised the rates over the past 12 and 15 months. While some central banks are mulling over a pause, the ECB is strongly committed to raising rates further. Even despite expectations of a pause by the Fed, risk appetite remains subdued. Market sentiment in the Asian trading was rather cautious. Stock markets in the Asia-Pacific region mirror trends on Wall Street. According to the Fed Watch tool, more than 70% of speculators are betting on a pause in the Fed's tightening cycle. However, even if the regulator takes a pause on June 14, it does not mean the end of the tightening cycle. Several Fed policymakers said that the pause in the tightening is likely to be a one-time move. The US dollar is likely to be trapped in the range of 103.50 and 103.70 ahead of the Fed's meeting. Last week, it lost almost 0.5% versus its rivals, logging the worst weekly drop since mid-April. In the Asian session, the greenback also remained near multi-week lows against some currencies, for example, the pound sterling and the Australian dollar. However, it has a weak bullish bias amid growing concerns about the global economic downturn. It helped the US dollar regain ground amid the falling yuan. It even tested the high of 101.70. However, some investors are still not sure about further tightening, and hence the US currency is lacking strong drivers today. China also did not provide any positive news. The country is still unable to start a steady revival. In addition, the People's Bank of China raised the foreign exchange reserve requirement ratio and pumped up more liquidity in the markets. The regulator injected 2 billion yuan on a net basis via 7-day reverse reports. As a result, the yuan took a nosedive, dragging down the Australian dollar as its liquid proxy. The Aussie was under the influence of two opposite factors, a weak yuan and a weak US dollar. However, for the Aussie, the fall in the greenback is much more important than the trajectory of the yuan. The Aussie advanced to meet a weak US dollar on early Monday, and during the Asian session it was trading with a bullish bias rising to 0.6750. It was moving in the range of 0.6732 and 0.6765. Apart from that, it retains bullish momentum after the unexpected rate hike by the Reserve Bank of Australia last week, as well as Philip Lowe's hawkish remarks. To curb inflation, the regulator could keep raising interest rates. These comments are extremely favorable for the Aussie. However, the cautious sentiment limits the upside potential of the Australian dollar, at least for now. The dollar-yen pair also lacked bullish momentum in the morning. The Bank of Japan is expected to keep its key rate unchanged this week. Katsuo Ueda and other policymakers have voiced many times their commitment to an ultra-loose monetary policy until inflation returns to a 2% target. And today, the central bank has got another proof that monetary easing is working perfectly. Producer prices in Japan rose to 5.1% in May, sloping for the fifth straight month to a 2-month low amid falling commodity prices. Initially, this data led to an increase in stocks and a decline in the yen. The dollar-yen pair approached 139.6 early Monday. However, during the Asian session, the situation had changed. The Japanese currency slid into the range of 139.10 and 139.70. It decreased to 139.40. Yet the yen is still weaker than the US dollar, especially given the likelihood of a new rate hikes by the Fed. The kiwi also grew higher against the US dollar, and last month the Reserve Bank of New Zealand announced the end of the tightening cycle. It triggered a 2.7% drop in the kiwi in May. An increase in the range of 0.6111 and 0.6141 helped the kiwi recoup some of its losses. In the Asian session, the kiwi dollar pair approached 0.6139, breaking through the 2-week high of 0.6138. And that's all for now. Subscribe to our channel and keep close tabs on the market developments. Be best and see you soon.